So it's been such such an amazing year, to be honest. Quite challenging, quite exasperating, and at the same time, I believe it's a year that is filled with a lot of opportunities, right? I've been restraining myself and sort of retraining my mind to want to to stop saying that this has been one of my most challenging years ever, right? I am beginning to be more positive, say more positive things. It could be quite inundating sometimes when you get on the news, turn on the TV, you're on social media, and all the things you are hearing or seeing are, things about, the global economy being grim all around the world. Like, how could baby formula be scarce ever in the US, right? How could inflation be affecting even the Western world? How could, the prices of goods and services be just over the roof? Around the world, a lot of people are struggling to meet their needs. It's just a precarious season. But hey, we know that not just because we are people of faith, for those who are people of faith, we know that each time there's like a downturn or like a recession, there's wealth transfer happening, right? Around the world. I put up like a tweet yesterday and I was like, see, when we say that stocks are down, crypto is down, investments are failed, investments are failing, it's hard recovering some investments. Where is the money? Like, and I said, see, God doesn't do fiscal or monetary policies like CBNs, as CBN or central banks of countries where they literally like mop out excess currency to sort of constrain the amount of money in circulation, or when they spend in order to increase the amount of money in circulation. These monies that we think, oh, I have lost in my stocks or in crypto, is somewhere right here on earth. It's in somebody else's pocket, right? And I tell people, I love the parable of the talents in Matthew 25 a lot, because it simply shows us what is happening, like, in times like this, and how wealth transfer happens, where, a man got 5 talents, another man got 2, another man had 1. The one who had 1 couldn't use his talent well, and literally, the boss said, collect from him and give to the person who had 10 already. This is what we see playing out, right? Where usually losses are moving as gains into the hands of people, right? So if you're on this call, I don't want you to despair. I know it's been trying, like for a lot of people, but we will win, right? You can't afford things to get to you. You can't afford things to take things so personally. I know your money is here, hanging here and there. We've got to remain positive. We've got to be rightly positioned, and we've just got to make the smart moves, put in the smart work, put in the hard work, build on proficiency. I see a lot of people are sort of knowledge constipated, like, I don't even want to attend any webinars again. But here, one word here, one word there is what will change our lives, right? That was like my welcome speech. Good evening, everyone. My name is Sola Adesakin, and I'm the lead coach and founder of Smart Stewards and the Smart Investment Club. This is an open house. It's not just for members of the club. We have invited our friends, and trust me, we're going to have an amazing time tonight, because this person that is going to be, gisting with me tonight, gisting with us, is such a seasoned finance planner, financial planning expert. I love him so much. He's so brilliant. Even before we started to hear about recession, he's been dissecting step by step things happening around the economy to us. It's such a joy. I love and respect him so much, and I learn from him. See, my diary is here. I know I'm going to write so much tonight, right? Before I call him, let's get to meet one another, guys, in the comments. Where are you watching from? If you can, share. Like, share the link. So this is also streaming live on my Facebook page. We will upload it to YouTube later. But so Sola Smart Steward Adesakin. Or you can just share the link with which you came on board. There are quite a number of people who should be here tonight. Some people might have forgotten. Please remind them this is not a conversation anybody wants to miss. And yes, this is not a conversation that you say, well, I will catch the replay. There's something about being in the room when conversations like this happen. And because, you know, as light moments like open up, you will have questions peculiar to you that you will be able to ask. So please share with your friends, get into your groups, drop a comment, tell us where you are at, and you know, let's have an amazing time. So it's Friday anyway, so I mean, you're not at the club, you're here, be here and invite your friends. In another 2 minutes, I will be bringing my guest on board, but please, so let me see comments. Where are people watching from? Yes, Abuja Feyi, so good to see you. Tell me, please, tell me in the comments, where are you watching from? Whilst I pull out the profile for our speaker tonight. So share with your friends and just tell me, as we usually would say, tell us where you're watching from. Yes. Okay. Just 1 more minute. Magodo, love it. Love to say Magodo, Michigan. From Michigan to where else? Mississippi, Morocco, and just every man. You see now, I was in the spirit. I was just saying Magodo, then Manchester came in. Imagine, I'm a woman of the spirit. Right. So who else is on this call? Yes. Who else is on this call? Just 1 minute and I will bring up my stage. For those who are on Facebook, please let me know where you're watching this from. And we will start this conversation with my guest in just one minute. London, thank you, love it. I see my SIC members, Smart Investment Club. I love you guys. I know it's been a trying moment, a trying phase for us, but we are coming out stronger and we're on the winning side. We are going to pull through this together. Investments are going to come back to us. We are going to recover, and we will end this year. Actually, we will start, the second half of this year on a very strong note. Trust me. And thank you for coming. Switzerland, love you all. So I will just read a few part of my guest's bio tonight. And 8:10, I'm going to bring him on board already and spotlight his video. I look forward to tonight. It's going to be amazing. So guys, 1 more minute, please share with your friends, bring them in and let us have an amazing Friday evening. I've got my cup of tea and my water here and my diary, of course. So some people haven't told me where they're watching from. Kalu Ajua is a certified financial education instructor, an astute professional with extensive experience in capital market operations, treasury, investment, asset management, and occupational pension services. He has over 22 years of composite experience gained over the years working with USA of Nigeria as a brand manager, BGL Limited, where he worked on the institutional pension desk, Fidelity Bank, where he headed the asset management desk for the private banking unit, and FCMB Pensions PFA, where he was part of the pioneers that set up the PFA from scratch and held the position of the CEO. He retired from the PFA with over 250 billion in assets under management. Kalu has an MBA from the University of Nigeria. Nsukka is an alumnus of the Lagos Business School and a member of the Association of Financial Counseling and Planning Education. He's an alumnus of the West African Capital Market School and the New York Institute of Finance. He's a writer to many blogs and business journals, including the Business Day newspapers and Naira Metrics. Are we ready? Wale, hi from Chicago. Pastor Pai from London. I love your zeal. I love your learning agility. Pastor Pai is over 60. She never misses any of our webinars. So let me see if my guest is here. Before I pass the stage to him. Yes, let me just spotlight him as well. Kalu, are you here?
Yes, I'm here. Can you hear me, Sola?
All right, good evening. I suddenly can't see your video again.
Oh, yeah, I'm right here.
All right, just 1 minute. I will just got you. Aha, yes. Okay.
There we go.
Here we go. Right. Your video seems to be a bit your audio rather seems to be a bit low. You want to increase on that?
Okay, I'm using the mic, so I'll try to get that like. Is it
All
better
right.
now?
Or maybe it's my speaker that is low. I will correct that here. Guys, can you hear Kalu very well? I'm excited. All right. So how have you been? Before I know you're ready for us, but hey, let's gist a bit. And before we go into the main conversation, how have you been, Kalu?
I've been good. Lots of work. Been good. I'm resting now. Did a book. That's done.
Awesome.
Weather is coming to summer, so fantastic.
Right, you look amazing, by the way, and
Thank
you look well rested. Right. Thank you for showing up every day. I go on Twitter because I know there's something I'll read from you that will encourage me. Like you're on your lane, you're facing your own thing. You don't get as active as you are on Twitter. You're just dishing out value, and I absolutely love you for that. Thank you for agreeing to do this. You were with us early last year. You came to our summit, and I know this is not going to be anything different in terms of the gems that you're going to drop for us. So I will leave you on spotlight, have you share with us, and then I will come back later for the questions and answers. All right, take it away from here, Kalu.
Thank you, Shola, and always a pleasure to be here with you and your team. Also, just to appreciate the good work you guys are doing out there, just educating people about finance. It's a lot. You think you're doing a lot, but the gap is just so much. So I appreciate all what you guys are doing. And just to confirm, Shola, my audio is good, yeah?
Yes, it's okay. It's perfect. All right. Thank you.
So I'm going to share, and then we can go from there. So like, as usual, I always like to just talk with stories, right? Just to explain what is going on. And then so we can just hope you guys can see the share. All right, so I just like to talk with stories, what's going on. If you understand what's going on, it's easier to then say what you're going to do next. So if you come to a crossroad and you understand that crossroad, is always very, very good. And you can know, should I go left or should I go right? That's what we're going to talk about today, right? Just what's happening. Shala's giving me a topic, which is exactly where's the money, and basically what's happening to global and investment environments. What can we learn from it with history, and of course, going forward as well. We're just going to talk, guys. The real gist comes when we ask questions. So I'm just going to give you guys background information, and then of course, we'll ask questions. Just a quick disclaimer there, it's all educational, it's not investment advice, just keep that in mind, right? It's all educational today. Then we're just going to overview US and Nigerian markets. Very important that I split two of them aside. We have lots of Nigerians here, and the way we invest, or the asset classes that we have to invest in Nigeria, are all different from the asset classes we can invest in the US. So I always like to split them out, and if I come to a topic, I will speak Nigerian and of course globally, just so that we understand, because it's very different, and you understand why as we go along. I always like to start with this chart, right? So if I always do a presentation, it's like my icebreaker. I like to start with this chart just to show us a few things. They are all investment themes. They look like maybe Bible themes, but they're all investment themes, right? So the first thing you want to do if you're investing is that don't fight the trend. If there's a trend, right, try to go with it. There are folks that invest against the trend and they make a lot of money. They're called contra investors, right? But usually, if you don't really know what is happening, try to understand the trend and then try to go with that trend. So don't argue. Go with the trend. That always helps, right? Then in investment, we always say the past is prologue. So in life, past is prologue, right? But in investing, past performance, it's not a guarantee of future returns. So the past is not hereditary. If something made money last year, it does not mean it'll make money this year. And nobody knows what's going to happen. So anyone's telling you, oh, invest in this because this will happen, or don't invest in that, nobody knows what's going to happen. Nobody saw COVID, right? So we don't know what's going to happen. All we can do is to say what has happened in the past, try to learn from it and try to get tactics and best practices, right? That's what we're going to try to do today. He that has more is likely, he or she that has is likely to get more. So if you have money in the bank, you have a big advantage. That's just what life is, right? If you have money, you can take advantage of opportunities. But everybody is going to get a chance. Everyone's going to get a chance. And in a gold rush, don't look for gold. Sell the shovel to the guys that will go look for the gold, right? So very important that you have to step back and look and say, where is the money really in this? Is the money in selling the gold or in selling the shovels and the tents to folks that want to go buy the gold? And of course, there's nothing like luck, right? It's all labor under controlled knowledge. So this is very, very good. Like, it just gives us the philosophy, I would say, of investing, right? And then we can then go into investing from there. So guys, I'm going to need your help in this next slide, right? So I have a picture of a car, and you can come off mute. Shola, starting from you. What can you tell me by simply looking at this dashboard? You don't know where the car is. What can you tell me? Let me start with you, Shola. Is the car moving? Is this car moving? What do you think?
Is it on this slide, or did you change your slide already?
This slide, can you use the slide I can see is a slide with a Alexa's dashboard. Can you see that? Is that what you're seeing? What slide are you seeing?
No, I'm seeing where's the money.
Oh, you haven't seen any slides change ever since?
No, I haven't.
It's the money slide that is showing.
Only one slide, guys? You
Right.
guys should have called me out. Sorry about that.
Okay.
So you guys are just seeing the very, very first slide. Oh my God, really? Okay, I'm going to stop share and I'm going to share again, guys, just so we catch up. So
Right.
now I've stopped sharing and I'm going to share again. This is my slide. So what can you see now, Shola?
I see the first slide still.
Can you see a disclaimer?
It's not on the main screen, it's just by the side.
Okay. You don't, but what slide are you seeing right now?
Where's the money? The first slide still.
Okay, so my slides are sharing, but I don't know why it's not showing up on the screen. So what can I do? How can I fix it?
Do you want to send to me and then I can?
I can do it right away. So give me a sec. I'm going to email this to you right away. I'm going to just stop sharing. I do apologize, guys. So you can, I've stopped sharing and I'm going to email this to you right away. So you can share your slides and I'm going to email this to you right now.
Okay, guys, we're trying to sort out slide issues, but in the comments, I mean, let's chat. Let's have a conversation. How have you been navigating the season? Have you been What have you been up to? Let's talk in the comments whilst we try to sort out the slides issue. I'm sure we'll do that in a bit. Alrighty, so what has been happening with you in your part of the world, right? Those in America, what has been happening? UK, Nigeria, most of the conversations have been around there's no something, everything has gone up. Prices of goods and services have gone up. Like our conversations are centered around some of these things happening. Wale says holding on to cash is no longer investing. Okay, prepping for a recession, inflation is real. Oh wow, that hurts. That's like a bass boss, but hey, that's the reality of the times. Okay, thank you for sharing, Wale. All right, guys, how have you been navigating this season? What have you been up to? What adjustments are you making? Again, we are not here to sort of make anyone fearful. We're not here to get you anxious or exasperated. We're here to just, talk about the reality of things and things that we can do to just navigate the season and win well. Again, like I said when we started the webinar, yeah, there's going to be wealth transfer. And it's not as if there's going to be wealth transfer. It's happening already. Yeah, it's easy to get so overwhelmed by what we see and what is happening. But hey, things are happening and we have just got to be rightly positioned. Oluwaseun says she's hedging and holding cash. How can you be hedging in the UK when you're not in Nigeria? Tell me how you're hedging, or tell us how you're hedging, right? Who else? All right, so we're waiting for Kalu to be able to share his slides, but guys, let's keep it real. What has been happening? How are you navigating the season? Are you taking on additional jobs, additional projects? How are you boosting your cash flow? Are you reducing expenses? Can expenses be truly reduced in a time like this? Anyway, maybe things that are not necessities, but what practical things are you doing? Please share with us in the comments.
Well, I have shared the slides, so if you have them, I'm just going to wait for you then. Thank
okay, you. All right. I'll look out for them right away.
Sorry about that, guys. Like Shola is saying, let me see if I can give you guys a great story about America. So if what's happening now, guys, this is the word we're going to talk about today. I want to talk to you guys about. It's called an adjustment, right? We're doing a rotation. That's essentially what is going on in the world right now. That's the word you want to have with you as we go along, a rotation, right? We're essentially saying that where you are right now, there's inflation, and we have to do a rotation from where your assets are to where they should be right now. So once Shola has those slides up, I'm just going to start again from the beginning, and we're going to go slide by slide whilst I walk you guys through, right? I did a nice slide job for you guys, and I can't wait to start to share it. Lots of questions on the chat. Excellent. Holding cash. Shall I have you say about holding cash? We're going to talk about cash in the slide. You're going to be very surprised about what cash is doing right now. If it's a good idea to hold cash or not a good idea to hold cash. But I made sure I put that slide in there for us. So what else? Slide much holding cash, not going back. Recession. Is there going to be a recession? Everyone says there's going to be a recession. If the US markets, if the quarter result comes out and we are at a decline, then officially we'll be in a recession. Right now, we just have 3 months of negative growth in the economy. So give or take, we are just 50% away from a recession, or we back out of the recession. Remember, there's an election in November in the US. Elections and recessions don't tend to go very well. The ruling party will always spend a lot of money to avoid a recession. So that's the only hope I have to avoid it. But if you look at what's happening in the markets, the diesel shortage, the baby food formula, the increase in prices, that sort of tells you what might happen. So yeah, so I would watch that particularly carefully. So how are we doing?
Yes, just 1 minute. I'm opening it up. I will share it in like 1 second.
Well, I'm looking at all the comments in the chat. Holding cash in foreign currency. Interesting. We're going to talk about that. If holding dollar or naira should be the pathway for you to go to, where do you live? Where should you have your money in naira? Should you have your money in US dollars? We're going to talk about that. So Shala is sharing. So there we go. So I don't think this is the right one, Shala. Not this one.
Oh, not this one. This was what you sent to me, though.
Oh, gotcha.
Right.
This is the one I've done with you guys before, so I will just send you a brand new one.
Okay. All right.
I'm going to hand it back to you, and I'll be back in just a quick sec.
Okay. All right. Thank you. All right. So Moranika is holding cash in foreign currency. Is that my Moranika? Please cut some soap for me. Right? Cut some soap for me. All right, guys. I'm sorry for the glitch. We're trying to sort out the slides issues, and we'll be right back. All right. So long-term investing in pounds. Faye, good one. 1 minute. Right. What else have you been doing this season? Somebody says that some excesses cut out, like no DSTV, but don't go too hard on yourself. Right? Well, I mean, it is what it is. We're not pushing fear. We're just saying, hey guys, be more intentional. One of the things I've realized is that these days, a lot more people are interested in understanding what is happening. People are saying, okay, I want to get some financial literacy courses. But I know on the other hand, some people are quite overwhelmed. It could be overwhelming when you see these things. When you look at your portfolio, like traditional investments, your stock portfolio is like, you know, some really good percentage now, cryptocurrency, and then even the local investments in some of these agricultural schemes. So you look at everything and you're like, what is happening at the same time, right? One thing I know is that everything happening is not peculiar to just Nigeria. It's global, but again, we've got to remain positive. Best case scenarios always. I am an incurable optimist. I put in the work, I pray. Yes, I face reality. I do my work, and I just hope for the best, right? Kalu, we are earnestly waiting for you. Or do you want to try sharing the slides again? Let's see if it works. Okay. Good. Any other person wants to practically share with us what they're doing this season differently? Like this time last year, if anybody would say that dollar would have hit 600, as of today, we would say, never, back to the sender. Especially for business owners who usually would use, need foreign currency to transact. Some people have locked in projects at a particular amount, and then, you know, this happens, right? But we win. We continue to move forward. For those who are just joining, welcome. We're just waiting for our guests to sort out the slide issues, and we'll be back. Moranika says she's looking into fixed income investments in foreign currency, e.g. Euro bonds. Thank you for sharing. What are some of the practical things you have been doing as well? Chinedu, so good to have you here. I miss you, bro. You usually would hit us with, you know, very valid points as to what to do part time, right? What have you been doing for yourself, your finances, your investments in a time like this? If you don't mind, please hit us in the comments and, you know, let's talk about it. Yeah, Chinedu, I miss you. Looks like I haven't seen you in ages. I thank you for your contributions all the time. Like, these are the things that you can do. So hit us in the comments. Have you been navigating this season? Let us know. To my SIC, Smart Investment Club members, welcome. I love you all. I really love to see you here. Thank you for making it a day. God bless you. We're winning this year by God's grace. Okay, so Tokwe, is it Tokwe or Toby? moving into energy, oil equities, and FMCG. I love it. Thank you for sharing with us. Right, guys, hit us. We are family. Oh, like hit us in the comments. What are you doing this season differently as we wait for our guest to sort out slide issues, and he'll be back pretty soon. Okay. Chinedu, I'm still waiting to hear from you. You can't hide tonight, right? SIC members. Chinedu says, been keeping my project savings in Forex and converting just before use. Obviously, one of the ways to go, like you buy it at 585, and you sell at 600, 15 naira difference. And what 15 naira extra, and the difference that, it will make on our finances. Thank you for sharing, right? Honestly waiting, but please share with us. This money issue cuts across a whole lot of things. It's been a while that I have seen like the pulse.
Let's go ahead. Let's share the slide that you have, and I'll talk through it.
All right. Okay.
Yeah,
all right. Thank you. Yes, I am going to share right now. The one that I have already, right?
Yes.
Okay. So here we go. Right, this one?
Yes, there we go.
Okay, so just let me know when to move ahead.
There we go, yep. So if you just put it up on the full picture, then we'll go ahead. All right, guys, apologies, guys, and we're just gonna go ahead and kick off. So you want to put it on the full view, and that would be perfect if you can put it on.
Oh, okay, sorry, I'm on full view already.
Already, excellent, so great. So investment and investment strategies, right? So let's go to the next slide. It's going to just show us our disclosures, right?
No, I think, do we have disclosures here? Oh, this is the disclaimer.
There we go.
Right. Is it this?
Yes.
Okay.
If you put on full view, then you can just change and I can just talk through it. Yeah. I want to get to a few slides, and that's where basically I'm going to focus all my presentation on today. We're going to talk about inflation, and we're going to talk about how inflation is going to affect your investments. And that's really what I want to focus on, a 10-year run round. So if you have those slides, I'll just take to where I want to be.
Okay, so do you want me to show the slides with the other slides beside it?
I see where you are right now.
Okay, so this is where I am. What are you seeing on the screen, though?
Disclosures?
No, I moved on already.
Gotcha. Okay. So, and I found my slides, and I'm going to save it, and I'm going to send it to you. I want you to share this one that I'm sending to you. This is the one I have, the one I'm going to send to you now.
All right. Okay. Waiting to
you're fine, Sola. I can see your slides. So let's go with your slides. I can see your slides. Go for it. I see your picture now. I see you now. So go ahead and share, and I'm seeing you now. Go for it.
Okay.
There we go. So we have, what are we going to talk about, guys? Let's talk about investing. Let's talk about the US and global markets. And then we're going to talk about bonds, foreign stocks, and alternatives. There are a few slides I'm going to dwell on in this presentation. The slides to do with inflation. I'm going to try to introduce that and talk about what's happening in the bull market. Then we can go right. So shall I next slide, if you don't mind?
Okay.
So a random walk that I tried to walk us through, guys. And I said, number one, don't fight the trend. So very important, you don't fight the trend, right? If stocks are going up, you want to basically be in that mindset of that the market is expanding or is taking what we call risk on. Then you invest with what the trend is doing. The market is going down. It might not be a dip. It might be that the market is repricing. And why is the market repricing? Because of inflation. I'm going to repeat myself a lot so I can get that learning across to you guys, right? So don't fight the trend. The past is prologue, but past investment returns are not going to happen all the time. They are not hereditary, which means if Bitcoin did well last year, Bitcoin does not have to do well this year. Very, very important, right? Nobody knows what will happen. So even if you have investment advisors tell you there's going to be a recession or there's not going to be a recession, keep in mind that no one can predict the future. Very important. No one can predict the future, right? Everyone that has, if you have the means, you are going to get more in this marketplace. So if the market goes into a recession and you have cash on hand, then obviously you're going to be buying distressed assets at a good price. So he that has is likely to get more. Of course, everyone's going to get a chance because you are all now playing in the market. In the gold rush, you want to focus on selling shovels to the gold diggers, not just looking for the gold itself, but trying to play in the ecosystem of that market. You also want to focus on that, how to play in that ecosystem so that you are investing in what makes the economy boom, not just in the gold, but in the ecosystem of the gold. And of course, there's no luck. It's all labor, but under controlled knowledge. So what you know is what you're going to use to get ahead, right? Excellent. So this is my random walk. Shall I always go to the next slide if you don't mind? So this is all we're going to do in investing. We have to know our life cycle. We're not going to spend too much time on our life cycle, but your objective, which is going to be your asset allocation, that middle guy right there, that is exactly what we're going to focus on going forward. What is asset allocation, which is that middle part, your objective? That is what differentiates you from the next investor sitting in this class next to you. The economy is changing. The economy is going through what we call, we're now putting in risk. So the Federal Reserve is increasing interest rates in America. The US dollar is what we call the global reserve currency, which means every currency in the entire world, the euro, the yen, even the Russian ruble, even every currency, the naira, is based off the US dollar. Since 1997, I believe since Obama was the president, the US has kept rates at zero or near zero. That means in the entire market, if you wanted to get a return, you have got to invest in risk. Risk means equities. So if you want to happen in the US bank, you earn nothing because interest rates from the Federal Reserve were zero. But when Trump, I don't know the year, so I'm calling the president don't matter. But when Trump was in power, we saw the economy doing very well. Hence, the US Federal Reserve started to raise interest rates. When interest rates start to go up, that's what you're seeing happen in America, the disconnect. Now that you see stocks falling and bonds going up, your objective is still what you have to hold on to. You cannot simply look at the environment. You have to look at your objectives and find out what is happening so you can still be invested according to your objective. So keep the objective in profile as we go to the next slide, as Shalai helps us with that. This is just the same slides, but before you invest, I want you to ask yourself these 4 questions. And also, if you are invested, you also want to ask yourself these 4 questions. So I know you had money in the market. You bought US stocks, you bought UK stocks, you bought Nigerian stocks. Right now, the market is going down. Your stocks have lost 30%, 40%, they are crashing. So what do? What you will do depends on these 4 questions. What is your objective? Has it changed? Last year, your objective probably was capital appreciation, because remember, we said from last year, the Federal Reserve's interest rates were very low. So for you to make money, you have to invest in risk. Risk meaning equities. Has number 1 changed? Has your objective changed? If your objective has not changed, then you don't do anything. You don't take any rash action by selling your equities to buy something else. So number 1, has your objective changed? If you're getting to the market first time, you want to answer question number 1. What about your risk profile? Everyone now has an idea that sometime this year or next year, there will be a recession. It's just when will it happen? A recession is a normal cycle in the economy. It simply means 2 quarters of negative growth. there will be a recession. There's just too much happening for a recession not to happen. There's Russia, there's high energy prices. Those two alone, and even COVID supply chain, are supposed to cause a recession. So that would happen. If there's a recession, how would it affect your number two, your risk profile? Are you going to take more risk in a recession, or are you going to take less risk in a recession? There is no correct answer. It depends on what you want to do. There is no correct answer. Number three, what is your investment duration? Are you a short-term guy or a long-term lady, right? Where are you? If you are a long-term person, then back to number one, you shouldn't take any action because there's no change. If it happens for 1 month or 2 months, there's no problem. But if you are investing your rent money, the money you're going to spend in 12 months, then you want to basically take action today because the events are changing as you go ahead. So 1, 2, 3, very, very important for you to answer. And those answers then determine where you would invest. Remember, our topic is where is the money? I'm going to show you the asset classes, and I'm going to let you decide where you should invest. But this 1, 2, 3, 4 is almost the same as 1, really. 1, 2, 3 is going to allow you to determine what investment class you should be in. So we talked about, remember the previous slide, we talked about the investment asset allocation. In this slide, we're now giving you the 4 questions you're going to ask yourself so that when I show you the opportunities, you will then say, okay, I am a capital acquisition guy. I have low risk tolerance. Hence, I'm going to invest in fixed income. I'll show you all of them. Then you decide where you should invest. Of course, I'll give you a few tips as we go along. Sola, next slide, if you don't mind. Now, this helps you guys. The first few slides, we'll talk about asset allocation and the questions you want to ask yourself. This slide, we're now giving you the investment we're going to talk about today. We're going to start all the way from cash. So I heard people saying, I'm investing in cash. We're going to talk about cash all the way to variable income. As we go from cash, which is number 1, to 5, which is variable income, our risk is increasing. So we're in cash, number 1. We're in treasury bills, number 2 and 3. Treasury bills 2 and 3 are all fixed income. The difference is that treasury bills and government bonds are issued by the government. So they are quote unquote safe and risk-free. But number 3 are the same sort of borrowings, but they are issued by the corporates and by the local governments. So those guys are not they can't print money. So they're not as risk-free as corporate, as treasury bills or government bonds, but they're all fixed income. So as you go from 1, you are totally safe at 1. The question is, what currency in 1? Are you going to be in Naira or are you going to be in dollar at number 1? That's the question for number 1. The second is going to be your treasury bills. 2 and 3 are the same. So if you say, well, I'm safe in cash, cash pays nothing. If you keep dollar in your pocket, it pays nothing, right? So if you are safe in 1, you earn nothing, right? And I'm going to share a slide with you at the very end, which I'm going to also share. But right now, cash, as a matter of fact, is doing better than Bitcoin, than equities, than every other asset class. So I saw the chart, the tweet, and I was like, the chart on it, and I was smiling. Because if you are on 1, you are actually not losing money, but you are not gaining any money. But everybody else in 2, 3, 4, and 5 are losing money. That's right down with the world. So if you hold dollar cash, you're not losing money, but 2, 3, 4, and 5 are losing money. 4 and 5 is what we call variable income. That's what we call risk. To make your capital to appreciate, you have to take risk. Your money, when it is in 1, 2, and 3, does not grow. It does not appreciate. You only earn an income on 1, 2, and 3. So if you put money in a fixed deposit or you buy a bond, the principal is not going to increase. Even if they pay you 100%, you are simply getting 100% of your principal. But if you buy MTN shares, like a lot of women in Nigeria did this year, right? Then you buy MTN shares, MTN is going to go from say 200 to 220. So your principal has increased, plus you get a dividend. So that's a difference. So 4 and 5 are your risk. 1, 2, 3 are your no risk. 1 is just holding cash. Holding cash right now in the entire world is doing better than holding any other asset class, because all the other asset classes are doing bad. They're all negative. So keep that in mind, guys. This is just for now, not forever. I'm going to show you guys what has happened in the past years. Remember, no right investments, no wrong investments. It's going to be how you answer those initial slides, your 1, 2, and 3. What is your risk profile? What is your objective? What is your duration? How you answer those questions determine which investment classes you're going to choose as we go along. And I'm going to show you guys all of them. So Shola, let's go to the next slide so we can keep on diving deep into this education. And I'm going to show you what you're going to do. If you are an aggressive investor, that means you are taking risk. If you are taking risk, look at what the aggressive guy is doing. There's the far guy on your left. This aggressive guy has got more than 10 years to invest. That's the key thing there. He has time on his hands. So he's investing almost 50% in shares. Why? Because he has time. If shares fail now or fail next year, he doesn't care, because he can actually buy more. And when the shares appreciate in 4 or 5 years, he's doing very, very well. So if you're an aggressive guy with 10 years to retire, you don't care what's going on in the world right now. Yes, you care, but it doesn't worry you, because the market will keep on going up and down. And I will show you the trend for 10 years to buttress my point. What if you're a conservative person, which means you are in retirement or you are about to retire? How should you invest? Look at what they are doing. They're doing almost 40% in bonds. What did we call bonds in the previous slide? Safe, fixed income, no risk. So you don't take much risk, but you don't get much returns. That's the problem with fixed income. So if you are buying a bond, which is a fixed income, a bond is just an IOU. The government says, give us your cash, we'll give you an IOU. That IOU is called the bond. When you buy a bond, the government pays you a fixed return. If they pay you 8% every year, they're going to pay that 8% for the next 10 or 20 or 30 years. If interest rates go up, you lose money. If interest rates go down, you gain money, because they are paying you a fixed return, but the interest rates are going up and down. That's how you make money in bonds. But in shares, you can lose 100% and you can gain 100%. So you are either aggressive, or you are conservative, or you're in the middle. The middle guy is also doing 40% bonds, but it's also got 30% in stocks. Then you see 20% that's Bitcoin, then it's got 10% in cash. So it's about middle ground. So we see how we're building it up for you. What are the investments? What is your objective? This is a model portfolio. Remember, there's no right or wrong investment. You invest according to your objective, your risk profile, and how long you have to retire. So next slide, please. This is the car I was telling you guys about that you guys didn't see, right? This car, if you look at this car, just by looking at the dashboard, Shola, the car isn't moving, right? Everyone can see the car isn't moving. So we can tell this car isn't moving. And if I tell you guys where this car is, if this car is in Lekki, can this car get to Benin? You guys will say no. How do you guys know? Because the fuel gauge is half tank. So it can go from maybe Lekki to maybe Redeemed, but it can't go past Ore because it's a half tank, right? We can look at the temperature of the car. We can know it's half. Okay, has it been moving? We can tell a lot about this car that we have not seen by simply looking at the dashboard. It's the same with the economy. When we look at the economic indices, we can tell a lot about what's going to happen in the economy by looking at the unemployment rate, by looking at the inflation rate. So if we know this car cannot go past Benin, Should we enter this car if we're going to Benin? Simple, we don't, because we can just tell. We haven't seen this car. We don't know where this car is, but we know you can't go past Benin by simply looking at the fuel gauge. The exact same thing we're going to do today. We want to look at economic indices, look at what's happened in the past, and see if we can then reach a conclusion on where we should invest. We've given you guys the background. We've talked about who you are determines how you invest. We've given you guys the characteristics of those type of investments that you guys can do. So if you're buying bonds, you're a safe guy. If you're buying equities, you're an aggressive person, right? So good point. So show our next slide for us, please. Now, if you watch the news, you've heard them say inflation is going up. So inflation goes up, bonds will fall, shares will fall, equities will fall. You're getting confused. Wait, does it mean inflation is going to go up, then my shares will fall? Or does it mean, guys, don't confuse yourself. Let me give you guys a summary of it. Remember my slide at the very beginning. Nobody knows. This chart is from 1971 till 2018. Source is the Federal Reserve. And it's showing you what will happen in America should rates go up. And the S&P is the index that tracks shares. So what you're basically seeing here is that what is the Fed rate? That is the safest rate in the world. The safest investment in the world is the US Treasury bill or certificate or bond. That's the safest investment in the whole world. Because once there's trouble, everybody runs to the US. So the dollar is the safest currency, safest. It doesn't mean it's the most profitable. It's just the safest. The Swiss franc is more, quote unquote, better managed. But the dollar, the US has got aircraft carriers and they can bomb you if you tempt them. That's why it's safe, right? Let's look at the fund rate. When it was 13%, so it was high, the S&P, which is very volatile, was down. So what do we conclude? That if rates go up, stocks go down. Okay, let's go to the next decade. The interest rate was 20%, very, very high. But look at stocks, 68%. Wait a minute. So that means when interest rates go up, stocks can also go up. Yes. Let's go to the next decade. 11%, 8% is going down again. Let's look at the next decade. 9%, 52%. Now I'm confused. There is no correlation. Let's keep on going down. 6%, 4%. Now it has changed again. 6%, 10%. 5%, 17%. 2%, 28%. What's the point? There is no correlation in investment, guys. It's what is happening in front of you that I have to look at. So they're going to tell you interest rates are going to go up, stocks will fall. You hear that all the time. But remember what I said, nobody knows what's going to happen. These are actuals, 71 till 2018, and the returns are all over the place. There are a few correlations that you must know. Once interest rates go up, if you are holding a bond, it's going to go down. If you are buying a bond, it's going to go up. Those are rules that you have to know. So if interest rates are going up, if you are holding a bond, it's going down. But if you're going to buy a brand new bond, it's going to go up. But after that, look at the returns. There's no correlation between what has happened with interest rates and what are happening with stocks. This is why we say what you should invest in has to do with your objective. Don't worry too much about what the markets are saying. So let's drive this home, shall I, with the next slide. Let's look at the next slide and drive this home and see what we can learn. This is a bit more easier now for us to look at. This is comparing stocks with inflation. And the question is, does inflation affect stocks? Again, if you watch the news, you say, yeah, interest rates are going to go up, so stocks will fall. Stocks are going to go up. Look at the dates again, 1970 to 2010. What do you see? Same thing. Stocks were low, inflation was high. Stocks were high, inflation was low. Stocks were high, inflation was low. Stocks were low, inflation was high. Stocks were high, inflation was low. No correlation. What really happens is this. If your stock sells a product that the price can go up, then that stock does well in inflation. Let's look at Nigeria. Everybody takes Gala and Lacasera, right? Shola, do you take Gala and Lacasera? Just nod. Do you like Gala and Lacasera, Shola?
Feed fan.
Yeah.
I
So
don't.
what do you buy every week, Shola?
Let me show you. 3-in-1 coffee.
What is that? Okay. Who makes that coffee, Shola?
I think it's Nestle.
Excellent. In America, everybody takes coffee. Everybody. Coffee is drank more than water. In fact, do you think if there's a recession, people will stop drinking coffee? They won't.
I don't think so. No.
They might stop going to Starbucks, but they won't stop drinking coffee. So if I was to buy shares in a coffee farm or coffee importer or coffee retailer, those stock prices will go up because people will still buy coffee. It doesn't matter if there's inflation or people are suffering, they'll still take their coffee. So that's the stocks that you want to shoot for in a recession. But let's talk about another product. What about Netflix? Or no, let's pick a nice one. Let's say Disney. If you are not eating at home, would you go on a holiday to Florida, to Disneyland, Shola?
Say that again, please.
If you are in a recession and you have a budget, where is Disney on your scale of preference? Going to Disney with the kids to spend about $10,000? You're not going to go?
At the bottom, perhaps.
At the very bottom.
It's not coming on the list at all.
What about makeup, hair extensions? Is that high or low? Where will that fall? Makeup. Medium, really, right?
Because we've got to show up powerfully.
You got to show up, right? I hear you. So, I mean, these are questions that you're going to ask yourself and say, if it is not a necessity, whoever makes that stock, the stock is going to go down. It's not the stock market, but the stock that you're buying, right? That's what will go up or down. People look at, let's pick Warren Buffett, for instance. What stocks does he buy? His biggest portfolio is Apple. What does Apple do? Apple just sells phones. Recession or not, people have to talk. You're going to talk in a recession. You have to buy a phone. Apple, you got to. What's his biggest other guy? Coke, Gillette, you have to shave. Insurance, they're not going to say you've got insurance, you won't insure your car. So he's buying necessities. He's not buying Snapchat. He's buying necessities that people would always buy: insurance, food, railways. In a recession, folks are always going to go, you're still going to move stuff. So railways, so he owns Santa Fe, he owns insurance, he owns Coke, he owns Gillette, he owns Apple, he owns banks. That's what he's buying. This is what explains his chart. It's not the stock market, but the individual stock that is very important. If the price is elastic, the price can change and they can sell you goods higher, then that stock does well. So let's go to the next slide. We're just going to drive our point home here. And I think the next slide. So you have to know this. I'm not going to spend too much time here, but the market only has 4 phases. This is now for my short-term people. I'm targeting the long-term people, but I have to talk to the short-term people. The market only has 4 stages. You are either accumulating, or you are advancing, or you are distributing, or you are declining. And if you know where the market is right now, that's what you do. So where are we right now? Do you guys think I can see the charts. Are we accumulating? Are we advancing? Are we distributing? Or are we declining? What would you guys say? Just what would you guys say we are? I'm going to click the chart and see what people think. Slow and slow. What do you guys think? Give me a chart. What do you guys think? Are we declining, or it seems like a decline? Yes, that's from Faye, number 4, talk about declining. Okay, what does declining say? Where traders become long-term investors. The price falls below the 200 moving average. All that 200 moving average means that the price for the 200 days has an average. So when the price falls below what it has been for 200 months or 200 moving average, it becomes a quote unquote dip. So when the market is going down, the smart guys are buying. I mean, look at Shola. Shola, you take coffee every day, you said. Do you want the price of coffee to go up or down?
Let it go down.
Precisely because you buy it every day. So do you buy stocks?
Oh, yes, I do.
Do you want the price of stocks to go up or down?
Let it go up. Oh. I guess it can't be much.
This is where we go aside, you see? And everyone always says this. We want the price of what we buy to go down, but the price of what we hold to go up. But if you are a long-term buyer, you want the stocks to always go down, right? So you can buy more of it. I'm not saying you're wrong. I'm just showing you the differences in a holder and a spender, right? So we want the stocks to be at number 4 perpetually, but we want to also make a profit. Just showing that to you guys, right? That's exactly what we are talking about. So know the phase. This is for my trader folks. Know the phase, then know the action to take. For the long-term guys, you guys you are good. Don't worry yourself. If you're long-term guys, thumbs up, right? Shola, next slide. Let's now start to talk about the individual class. I think we've talked about who you are. We've talked about how you should invest. Let me start to give you guys data and facts to back up a few things. This very, very simple chart. Don't let these numbers confuse you. Very, very simple. The first chart here is asset class. It gives you all the assets in the world, US stocks, US REITs. REITs just means property, real estate investment trust. You see foreign development market stocks, that's Nigeria. Foreign real estate, that's Nigeria. US junk bonds. Junk bonds are bonds that pay a high interest rate. So Nigerian Euro bonds are junk bonds. Forget the word junk. It just means that it's a bond that pays a high interest rate. So all the investments you can invest in the world are there. This is a 10-year return. 10 years. If you invested in US stocks or in any asset class for the last 10 years, your best return is US stocks. You would have made 14.2% over 10 years. 14.2%. The next best investment would have been US properties, which is US REITs. You would have made 9.3%. This is as at February 2022. 10 years going back. Then you see all the stuff that I mean. Look at commodities. What are commodities? Oil, gold. Right now, 10 years before February, commodities were negative because nobody was buying oil. Nobody was buying gold. Then Russia. Now, boom. The only asset class in the world today making a profit is commodities. The only asset class in the world. Because it's artificial, right? There's Russia, there's sanctions, there's US wants to be green. But this is the picture for you for 10 years. If you are investing for 10 years, you know that US stocks, US property have been the best performer in the entire world. So this is US, I mean, it's crazy that US stocks are doing better than Nigerian stocks. It should be the other way around. But this is the fact, guys. Look at the risk. If you look at the risk, look at the volatility. So where's Nigerian stocks? Nigerian stocks are 14, so they are more risky. That's if you see the volatility. Foreign developed markets, volatility is 14, but US is 13. So you tend to see what's going on for the entire world for 10 years. So this is the point I'm making. If you are a long-term guy and you are in US markets, you are okay. Don't panic. It might be a number 4, i.e. a drawdown for you to buy more coffee like Shola is doing. Because if you buy more coffee for 10 years, by the 5th year, would have forgotten 2022. Unless COVID comes again, maybe to be COVID-20, then we'll redo this all over again. But this is a 10-year gap for you. Look at Treasury. When you see Treasury TIPS, those are Treasury bonds that are protected from inflation. Treasury TIPS is underneath foreign junk bond. Treasury TIPS. 10 years, nonsense, 2.8. But right now, Treasury tips are paying about 9% because inflation has gone up. So Treasury tips have gone up as well. But again, it's artificial because if we have a high inflationary period right now, it's going to come back down. But for 10 years, US stocks have been up. Keep that in mind, guys. That's what you want to know from this class. Bonds, look at where they are. Safe, but they don't pay you anything. So for 10 years, if you invested in US bonds, 2.5% for 10 years. If you invested in Nigerian bonds, emerging market government bonds, 0.2% for 10 years. They don't pay you anything. Commodities, all this gold, blah, 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 they pay you nothing, negative. So this is factual. And it lets you know if you are in the right asset class. Remember, look at the volatility. Stocks pay high, but have a high risk. Commodities pay low and have a high risk. So what are you doing there? It's only now that you should be there because it's energy, right? Look at treasury tips. They pay low, have a high volatility as well. So you want to go for a high return and low risk. That's what you want to target. But this is just the factual data for you guys. So let's go to the next slide. We're going to walk through all this. Yeah. So I'm just going to run through this ETFs. We don't need to spend too much time here. Next slide. Just to tell us what ETFs are. ETFs are just going to be their stocks and their mutual funds together. They behave like a stock, which means you can trade them during the day. But they behave like a mutual fund as well, which means they're a collection of individual assets. They could be collection of shares, collection of bonds, collection of real estate, or a combination of everything. This is good. So when we talk about ETFs in next slide, you guys understand what ETFs are. So ETFs are like your mutual fund that you guys know, but they trade during the day. Mutual funds don't trade during the day. You have to wait till the end of the day to get a price to buy. This is a good slide for you. So I think we're going to skip the next slide. Okay, cool. So now I told you guys we're going to do all the investment classes. We've talked about how you should invest, who you are, what is your risk profile. Then I went and gave you guys the entire market, and I said 1, 2, 3, 4, 5. 1 is cash, 2, 3 are bond, 4, 5 are variable income shares. Let's now go specifically and talk about bonds, right? So these are bonds. These are US bonds, ETF. So these are basically saying these are your returns if you had invested this year in all these types of bonds. First of all, no bond is making a profit, first of all. So when you invest in bonds, you don't make a profit, right? But you are safe, but you don't make a profit. You might lose money, but you don't make a profit. And look at what's the best performing bond. Short-term inflation index treasuries, STIP. So TIP means treasury protected. So if inflation goes up, it goes up as well. Why is short-term doing better than long-term? Because the Fed has said they're going to invest money. They're going to raise interest rates from now till the foreseeable future. Remember the point I made. If interest rates are going up and you have already invested, you will lose money. If interest rates are going up and you are buying the first time, then you are okay. So if you are already in bonds and interest rates are going up, then you are losing money. That's what the chart is showing you. What's the worst bond you can buy? Long-term corporate, which is the VCLT. That's the worst bond you can buy. Why? Because it's a long-term bond. So which means that you are locked in for the long term. You can't come out easily. So you are locked in. The best is short term. The worst is long term. But again, it's a corporate bond. Corporate bonds are risky. Government bonds are less risky. So you see that on one end, you have corporate long term doing very, very bad. On the other end, you have short term government bonds doing very, very well. Then you see the other guys are all in between. So again, there's no right or wrong investment. There is only the investment that matches your investment objectives and your risk profile. So if you are looking at bonds, you now know that you want to target short-term treasury protected bonds or just anything short-term for now. That's what you want to take away from this slide. So let's move on. Someone says, if you say you are losing money, what of the quarterly interest paid? Please explain it. I will. Bonds have an inverse relationship with interest rates. The yield of the bond and the interest rates change. They move like this. If interest rates go up, the yield of the bond goes down, no matter what they are paying you. So if they are paying you dividends of 10 Naira a quarter, you're going to get 10 Naira a quarter for the next 20 years. 10 Naira today, is it worth more today or in a year's time? It's worth more today. So which means that in a year's time, if they're paying you 10 Naira in a year's time, it will lose value. So bond prices and interest rates move inversely. But the reverse will happen. What if the interest rate starts to fall? Then your bond price goes up. So let's see that statement again. We're seeing it in a different way. If interest rates fall and I am already in bonds, I make money. But if I'm buying bonds new, I lose money if interest rates are falling. So right now in America, are interest rates going up or are they coming down? They are going up. Because interest rates are going up, bonds are coming down. Your coupon is just the dividend. The price of the bond is what we're talking about. The price, the face value, that's where you are losing money. You bought it for $100. If you try to sell it today, you are selling it for $98 because the price has come down. Why? Because the interest rate has gone up. Interest rate and price keep on going up and down. It does not have the same value. Once interest rates go up, the value changes. So ask your broker for your yield to maturity on the bond, not the coupon. Ignore that coupon you see on the bond. The coupon, that 10%, 5%, it's there the first day. After the first day, you look at the yield to maturity. Write it down, the yield to maturity. So call your broker and be like, hey, one guy was telling me some crazy stuff yesterday. He said, if interest rates go up, my bond price will come down. What's the yield to maturity on this bond? I want to check it. I want to check something. Then you see what he'll tell you. The yield is what you check. If you go to Yahoo Finance, you will see there most foreign apps will quote the yield to maturity for you. Even in Nigeria, if you go to the FMDQ, if you have a Nigerian bond, go to FMDQ, they will give you the yield. It is different from the coupon. So once interest rates go up, your bond has lost value. If interest rates are coming down, your bonds are gaining value. Right, guys? On this slide, I try to show you guys, in case you don't want to do bonds, but you are looking for high yielding fixed income investment, you might consider this, guys, right? I'll give you a few. You just look at the ticker, right? And you can Google them later on. ARI, I don't know if they are here. ARI is Apollo Real Estate REIT. So they buy warehouses and they let out to Amazon and the rest. ARI pay a lot of dividends, almost 10% in dollars. ARI, CAPL. Those are some good things you can look at. That they are not bonds, but they pay huge dividends. ARI, CAPL. If you are not too adverse to smoking, MO, that's Philip Morris. They pay almost 12%. So just a few names for you there: ARI, CAPL, MO, and they are. I mean, this is just what I did. This was a chart. I pulled up this guys. I told my contact to give me the highest paying dividend stocks, and he gave me a few names here. So you can see CAPL, Cross American Partners, ARR. ARR pays even higher than ARI. So ARR, that's number 3, CAPL number 8. Very, very good, guys. If you want high yield, then you don't want to buy a bond, right? Okay, I saw a nice question here. I'll take the question later, so I don't read it myself. Someone wanted to explain yield to maturity. The yield to maturity is the coupon adjusted for the for the change in the interest rates. You can't buy, these are not Americans, these are not Nigerian stocks, these are American stocks. So to invest in this, you have to have an American app. So Passfolio, Trove, Chaka, those sort of apps allow you to invest abroad. That's how you get these guys. These are not Nigerian, these are all foreign, right? All right, guys. So your yield to maturity is your interest on that bond adjusted for the increase or decrease in inflation, in the interest rates in the economy. All right, so let's move on. I'm getting warmer now. I'm going to run through this 4 slides. There's just going to be 4 examples for folks that want to invest in Nigeria, but are looking for dollar investment. So there are 4 examples here. You can just go through all 4 of them. This is Legacy USD Fund. This is ARM Fund. I think next one is one more. This is Stanbic IBTC. These guys are all in Nigeria, but you invest with dollar and you earn a dollar rate. Difference is going to be some are money market, some are long term. So make sure you find out. So USD, there's FCMB, there's IBTC. I think we showed the other one. Yeah. So this Shola has the slides and she can share them with you. Right. So the next one, ARM, FCMB, all recommended for you guys. ARM, Stanbic. Yeah. So now we've done fixed income. We've done fixed income. We've talked yield. We've talked bonds. We've done fixed income. Remember what I said? You invest based on where you want to be. I know what's Standard Charter. Coco, tell me what Standard Charter is, right? Okay. All right. So that Cowrywise, yes, Cowrywise also has Euro bonds. Yes, Cowrywise, and they have it in funds. So also a good place, Cowrywise as well. So let's go to investing in foreign stocks. Let's click there. And again, just like we did with the total market, this is for 5 years. This is for 5 years, right? But this is as at February. Surprise, surprise, who is number 1? Commodities. Remember that for 10 years, commodities was the worst performer in the entire world, and stocks were the number 1 performer. But because of all this stuff, it's not just Russia, it's the US government trying to be green. It's Russia, it's everyone saying they want a clean environment. So oil prices have gone up. So you see commodities, GCC, that's the ticker for the ETF that tracks commodities, is up for the year 36%. This is at February 2022. But look at the very, very bottom. Look at the very, very bottom. You see crude oil, you see gold, you see US dollar at the very bottom. What's the return of crude oil? Crude oil that today is shining at making 24%. 3 years is minus 11. 3 years minus 11. 5 years minus 5. So you can see this is just an outline, a bump, because of all these wars we're having. Look at gold. Gold is always, quote unquote, a performer, right? 5 years, 8.4. 3 years, 12.9. Because it's now a commodity, right? Even Russia has now pegged in quote their currency to gold, right? Look at US dollar, nothing, no return. It's safe, but no return. So for 1 month, 0.0, no negative, but it's 0.0. So if you go through, you see who was the best performer in 5 years. Same thing, US stocks. If you want to buy US stocks, that thing in the bracket, that's a ticker for VTI. That's the ETF. Got about nearly 5,000 stocks. So you simply buy the VTI and you have bought Apple, Facebook, Tesla, Berkshire Hathaway, all those stocks are in the VTI. You buy it, you get it. So US stocks are doing, of course, better 5 years and also 10 years. Same thing with real estate, 5 years, 10 years, they're doing very, very well. Foreign stocks, 5 years, 10 years also did very, very well. So if you're trying to buy stocks, it's a good chart to see what has happened in the past. We said past is prologue. It doesn't mean it will happen, but it gives you an idea. You can now tell that just by looking at this chart that even though commodities this year, crude oil this year is up 12.9%, overall, crude oil story is not that good. -5 in 5 years, -11 in 3 years. So keep that in mind when you're buying all this stuff. Keep that in mind, right? So show our next slide, please. This is just a picture I took of the heat map for the market. I think this is for the individual stocks for the year. Microsoft, that's your top left. So the bigger the box, the bigger the company. The red means negative, green means positive. So everything is red for the year. There's no need to even look. Everything, Microsoft down 13%, Google down 8%, Amazon down 12%. Look at Tesla, your top right, down 20%. Where are the greens? Where are the greens? You see energy. That green near your 3 o'clock, that's energy, oil and gas. XOM, that's ExxonMobil. CVX, that's Chevron. So that green near your 3 o'clock, that's where you have the green. That's oil and gas. That's where we're making money this year. Where else are we making money? If you look below near your 6 o'clock, you see aerospace and defense. You see a company there called LMT. It's up 28%. What does LMT make? That's Lockheed Martin. All those missiles there's in Ukraine, that's their javelins, all that kind of nonsense. LMT, Lockheed Martin. So if you don't know anything, just look at the map. Where is red? Where is green? Oh, that's when I'm making money. You go and buy it. Look at Berkshire Hathaway, Warren Buffett, BRKB. It's near your 9 o'clock. You see, it's also in green insurance. People, you still buy insurance. You can't say because you don't have money, you won't insure your car. You still buy insurance. But who is making the loss? Look at Facebook, pure red. NVIDIA, pure red. Adobe, red. Microsoft, red. Amazon, red. Apple, red. This is for the year. So you can see what's happening in the year. Where else is making money? If you look at your down, I don't know how to show you guys, but agriculture is also making money because maize, Russia, Ukraine are fighting a war. So everyone, the price of grains has gone up. So if you're doing agriculture, making money, exactly. So this just tells you, if you go, LMT, that's LMT right there, Lockheed Martin. So aerospace, bombs, planes, javelin, there you go, Shola. That's LMT. And if you go, Berkshire Hathaway, that's Warren Buffett right there. Anywhere you see green, that tells you the sector. Coca-Cola, tobacco, look at tobacco. People are still smoking, right? Oil and gas, energy. Red is every other person. Look at agriculture right there. So maize and grain. So it just tells you what people are buying. So if you're going to buy equities, you want to be in this sector, right? That's where you want to be. But remember, if you're a 10-year guy, you want to ask yourself, will this continue for 10 years? Do you think people will stop buying Facebook or people will stop doing Google for 10 years? If the answer is no, then you want to buy at the dip. Remember, there's no right or wrong investment. It's according to your objective. If you're an older person, you are retiring, you shouldn't be doing equities at all, or a small part of your portfolio, because you have no time to recover. That's the point. Doesn't matter if Berkshire Hathaway is good or bad, you have no time to recover. So you want to be a bit careful there, right? So next slide, please. So this is the same thing I've done, but now I just picked the ETFs, just the ETFs. So instead of me picking the individual stocks, I'm picking the ETFs. So you look at what's green? Commodities, US volatility, which means that these are the people that are betting against the market. So you see inverse, you see volatility, then you see energy, XOP, they invest in oil and gas. Inverse, they're betting against the market. Look at Brazil is red though. Russia is red. Brazil is green, Russia is red. No surprises there, right? So this again tells you technology, red. Why is technology red? Because technology is a growth sector. Growth sectors grow by borrowing money or by growing. They spend a lot of money. So if interest rates are going up, their cost of borrowing goes up. But someone's going to say, but Kalu, Apple has a lot of money, so they're not going to borrow money. So why is Apple low? Well, because when you calculate the price of a stock, the price you see is the discounted price of all the earnings of that stock brought back to today. So if interest rates go up, what it means is that the discounted price of Apple in the future brought back to today is lower because interest rates have gone up. So I have to adjust my price for today to take it lower. It's really just adjusting. That's why interest rates affect everything. Inflation affects interest rates, and that's what's happening in the world today. The inflation is affecting our interest rates, and our interest rates are affecting all those asset classes. Some are doing well, some are doing bad. That's why I said it's a rotation story. So people are rotating from what's doing bad to what's doing well. But if you're a 10-year guy, why are you rotating? Because there's no point leaving bonds or leaving your equities to go and chase maze, right? You want to know what's your objective and you want to stick with it, right? So next slide, please. What if you just woke up? All this stuff we said is just too much information for you. You want something simple. Keep it simple, Kalu. How can I invest in this global market, Nigeria, US? I don't know all these things you're talking about. I have this Rip Van Winkle portfolio. Who is Rip Van Winkle? Rip Van Winkle went to sleep for 30 years and woke up, right? That's the story. This is a portfolio you can do and go to sleep for 30 years. You don't care. And you can actually choose how you want to do it based on your risk profile. It just got four guys. You have bonds. Remember what are bonds? Safe, fixed income. What are equities? Risky, capital appreciation. So we only have two things, only two types of investment. Either we're going safe or we're taking risk. So you ask yourself, do you want to buy shares? Yes. What's the best performing shares in the entire world? US markets. Okay, so you just go buy VTI. End of story. But wait, I want to buy Toyota. I also want to buy Chinese stocks. Okay, so you want to buy stocks outside America? Fine, just buy the VXUS. So by buying the VTI and the VXUS, you have bought all the good stocks in the entire world for $20. $20. The expense fee is less than 1%. That's it, $20 minimum, right? VTI, VXUS, you can buy all those stocks, Toyota, Tesla, Nvidia, Berkshire Hathaway, just VTI, VXUS. But you say, I don't like risk. I want to keep it simple in fixed income. So you go to bonds, you just buy the BND. The BND is all the good bonds in America. That's it. They don't buy foreign bonds, just BND in America. If you buy the BNDX, you are buying all the bonds minus the US bonds, right? So 4 stocks, VTI, these are all ETFs. For those that just joining the class, ETFs are like our mutual fund. We talked about that earlier. So just 4 mutual funds give you exposure to all the investments in the world, in equities and in bonds. You can now do your allocation. You can say, okay, I like risk. I'm a younger person. I have 10 years to wait. So I'm going to do 60% in VTI. I'll do 20% in VXUS. And just because I want some insurance, I'll do 10% in US bonds. That's what you want to do. Very easy. 4 of them, and you allocate based on your objective. Remember, we talked about your objective in the very, very first slide. We said that aggressive guy, we showed that aggressive guy, and then we showed the conservative guy. That's what you're building here. This is, you don't have time, you don't understand this thing. What a simple thing to do. VTI, VXUS, they are ETFs. And ETFs invest for you, they manage it for you. So you buy the VTI, you get the exposure. So this is end of story. So you build out your portfolio, assign the percentage. I want to do this, I want to do this. End of story. No much grammar, no numbers, no maths. Simple, right? All right, so next slide.
Sorry, I was reading the chats. Priya Jaya has been hilarious. She says she wants peace of mind. We'll come to the chats in a bit. Investing in alternatives, all right.
Yeah, if he wants peace of mind, he should only be buying fixed income. And there are lots of stuff I can show you for fixed income. There are lots of fixed income. This is the last slide to talk about alternatives. So we've talked about bonds, we've talked about equities. Are there alternatives? Yes. Alternatives for fixed income would be crypto staking, not Luna. Crypto staking, right? And what's the difference? Let me give you guys a difference. If you want to stake, they're what they call stable coins. So do not ever buy anyone that is an algorithmic stable coin. That one is gone forever. Algorithmic stable coins, gone forever. So all this Luna, no. Just buy so you take your US dollar, you buy a crypto like Bitcoin and Ethereum, then you stake it. You're not buying to trade. You just stake it because it gives you a higher interest rate. If you live in America, there are some apps that allow you to do it directly. You don't have to, you just, I think it's called Outlet. If you're interested, tell Shola to ask me. I'll send you guys a link. I do it. I'm not advising. If you want to do it, you're taking the risk. They pay almost 8 or 9% on staking. You just buy, you get 8-9% on fixed on that crypto staking. This guy can be like 10% of your portfolio, 5% of your portfolio, because that's also where the money is, right? So we also have to make sure we have a balanced portfolio, equities, bonds, then a bit of all these guys that will just jazz up the portfolio. If you don't like risk, don't do this. But I have to show you guys all the options. Like I said, you choose. My job is to show you, you choose. There's also other type of investment in the US, which are called fixed annuities. And they're becoming very, very popular now because the markets are going down. What they are is they give you like a benchmark, right? And they tell you, if the market goes up, you will not make the full market, you make the market less 2%. But if the market goes down, you make 0. Let me explain to you. If the market returns 10%, they give you 8%, but it's guaranteed. They give you 8%, but the market is 10, you get 8, guaranteed. No, you don't ask them a question. And some can actually promise you that 8% for 20 or 30 years. But the market crashes. Market does not crash to 0. Market crashes to -0, guys. The market crashes to -20, they give you 0% for the year. But they don't take away your earnings. You carry over your profit. You just don't get a return for that particular year. They're called fixed annuities. We're going to work with Shola. If you guys are interested, I'll see what we can do for you guys. They don't talk to Nigerians, right? But I'm trying to convince them that some Nigerians are good. So let's see what we can do about that, right? So Shola, next slide. And we're almost at the end, guys. It's just what I want you guys to do before you go and start investing and saying, Kalu, to invest. You have to follow 1, 2, 3, 4, 5. You have to follow 1, 2, 3, 4, 5. Before you invest, guys, go and get an emergency fund. An emergency fund is 3 to 6 months of your non-discretionary expenses. What are non-discretionary expenses? These are the expenses that you must make, even if you don't have money. Food, rent, school fees. You have to have this, guys, set aside. So you want to get 3 months of it. So you calculate what are my necessary expenses, divided by 12, save minimum 3 months. Before you buy any stock, before you do anything, build up your emergency fund. You have to build it immediately. You can say my target is, if my monthly emergency fund is 500K, which means I want to have 1.5 million. I agree. Build it. Maybe when you're halfway, you can still invest, but make sure you have your emergency fund. Very important. Why? The market goes down and you need money. If you have an emergency fund, you can get that money without selling your investments. That's the whole idea. So you are protecting your investments by having an emergency fund. So get that guy, number 1. Number 2, if you have dependents, you should have life insurance policy. You are not insuring your life. There is no life insurance. You are insuring the loss of income should you leave. A smart way to do it is this. If you have a house that you have a mortgage and you are paying a mortgage on, you take life policy on the value of your home. So if anything happens to you, the life policy at least pays the house, and your kids and your spouse can stay in that house because you paid for it. So at least the minimum is the value of the house or the mortgage that you have paid. That's a good idea to do it with. Some policies allow you to pay to a trustee who will take care of your children's education, things like that. But if you have dependents, you must have a life cover before you start investing. If you're just a young guy, you're not married, what are you paying life insurance for? Take that money and do something else with it. But if you have dependents, you should have life insurance cover. Then retirement plan. Please don't tell me RSA, blah, blah, blah. I don't know where money is story. Your RSA is a tax-free investing. Just keep putting money in. It's tax-free savings. They don't tax it. It's compounding for you. Just put it there for now. Leave it because it's a law. If you're in America, do your Roth IRA first. Make sure you max that guy out. No, sorry. if your company is paying you a matching 401k, do that to the full match first. So if the company says, if you invest in your 401k, we'll match it 3%, make sure you do the full matching. Don't say, I want to send money home, so I'll only invest 1%. No, match full, get the full match. Once you have done your full matching, then you want to do your Roth. Hear what I'm saying? R-O-T-H, Roth IRA first. Roth IRA means you pay taxes today for the contribution, but tomorrow or anytime you can take it out without penalty. So you want to get that in. Roths are so good that the US government will stop you from investing all your money in a Roth. So they give you a cap, I think it's $6,500 right now to put in a Roth. So the first thing is your 401k match. Next is your Roth IRA. Then after that, here you can continue to do investing and all that. So we're at 1, 2, and 3. Only after you have done 1, 2, and 3 can you then start to invest in VTI or bonds, all that kind of stuff. You have to do 1, 2, 3 first, right? Then of course, mortgage is also good. If you especially live in America, the pathway to wealth is through a mortgage. I wrote an article once, guys, how to buy a home in 36 months. Research, factual, done it, know it. So go look for it. Kalu Aja, how to buy a home in the US for 36 months. I think I wrote on Naira metrics. Get it and read it. It's very, very factual. It helps you with your credit scores and all that. So you will love it, right? So Sean, next, I think we're almost at the end. I think this is the end slide. Just my call to actions, guys. I always plug my book, right? Not because I want to sell it, but because it will help you. I write a lot of stuff that I have seen. My career is private banking, asset management, investment management, RSA, PFA. I've worked in the US, I've worked in the UK. I know a lot of stuff, guys. I'm being very, very humble. I'm telling you, I wrote lots of stuff in that book for you that I really can't explain on the PowerPoint. It's written chapter to chapter. So you don't have to read the entire book. Just pick one chapter and read. Get it. It's on Amazon. It's at Roving Heights. Get it. Keep it. If you see stuff you don't know, pull the book out and try to read. I try to write it without buzzwords for fresh, brand new folks. Shola, I'm good. I can take any questions, and I'm all good.
Thank you so much, Kalu. So each time I listen to you, oh, sorry, I was going to spotlight both of us. Each time I listen to you, it's always something new all the time. I thank you. I've been going through the comments and I like, this is like economics 101. As usual, I have taken notes and I really, really, really appreciate the depth of knowledge that you have shared with us. Now, I also appreciate the fact that you came for us as usual from a global perspective. I have a couple of questions and then we will go into the comments. So of course we run the Smart Investment Club and it's been some very uninteresting times for us because last year we did a couple of alternative investments, especially in the agro space. And not just with anybody or any company in the agro space, the top guys, right? Aside that, generally in the Nigerian economy, we see a whole lot happening, right? In the US, some of these things that you have explained, interest rates, they're quite predictable in the sense that when interest rate goes up, bonds will fall. Predominantly, yes, we have members around the world, but our membership base is predominantly in Nigeria. A whole lot of people are here. And so we're in the midst, I kid you not, we're in the midst of litigation, just trying to get our funds out. So a lot of people are literally bleeding. And, two questions. For those who are still in Nigeria, who are thinking, okay, so by the time we get out of all of these things, I will also do some of those things that you have said. what do you think of the Nigerian economy, especially, with the elections coming, especially with devaluation issues? Naira has hit about 610 to the dollar. As a financial planner and economist, what do you think? Because yes, we are going to do all of those stocks. And to be honest, a lot of people here have been investing in stocks overseas. Brilliant. This sheds a lot more light and, gives us guidance on what to do. But where we are right now, this is home. How do we, are you saying just go and invest overseas? Don't do any investment in Nigeria. Once you get your money out or whatever it is, don't do any local investment. Don't do agro. Don't do anything. That's my first question, Kalu.
Yeah, so I think it's a great question, and I get this question all the time, right? So what should you do if you're Nigerian? Let me talk from if you came to me as a client and you came and I asked you questions. If I look top down at Nigeria, top down and just come down, right? You have a country that exports crude oil that earns a lot of money in US dollars, but all the crude oil, everything, all the crude oil has been allocated to pay debt. Not even salaries, debt. So when we earn $1, we pay $1 in debt. Then we then pay salaries again. Then we then borrow to do roads or whatever. So, I mean, the income is already gone, right? The FDI, the foreign investment flow, is down, right? Remittances are down. The exchange rate is the report card of the economy. It's down. 600 is, in my view, you can get to 800 if you're not careful. Because, yeah, you've seen all the guys buying dollars for elections. Unless those guys are giving dollars, go back to the market and change it. But if they hold it, then the dollar is going to go to 800, right? But so the fundamentals of the Nigerian economy do not look good. There's no kidding about it. I tell people, if you are going to spend money in a year's time from today, or you don't need your Naira for a year, don't keep it in Naira. The Naira is no longer a store of value. It's just a means of exchange. That's the fact right now, right? What can change this fact? If we have a smooth elections in 2023. When I mean smooth, I don't know who's going to win. If we have an election, people go through it, then there's a winner, people think it was fair, no problem happened, a new guy comes in. That new guy, once you have a new guy and it's sworn, it's no wahala, right? The amount of investment that's going to flow to Nigeria, the dollar is going to crash to maybe 300, 400. Because lots of people, nobody's investing. You just said it now. Everyone is just, let me wait and see. Let me buy dollar. That's what everyone is doing. And that's the fact. I can't tell you go do something different. That's what everyone is doing, right? Because we don't know what's going to happen. I watched Goodluck Jonathan today speak. I don't know when he spoke. I watched it on WhatsApp. He said, and I'm saying this out here, I'm quoting it. He quoted Guinea. And he's talking about how the politicians in Guinea changed the constitution and they rubbished the elections and the army did a coup. That's what he said. He's implying that if by 2023, the politicians mess up, that the army could come back. This is the president talking. He's also in a big conference. And it's true. Everyone here knows it's true. There's nonsense going on. 4 trillion for subsidy, you reduce the education budget and the health budget to import 4 trillion naira worth of subsidy. How will the naira crash? The CBN governor that should be doing monetary policy is contesting the elections. The Attorney General is contesting the elections. A train from Washington to Virginia is stopped. People are kidnapped. No one has heard from them. The president hasn't gone. I used the word Washington and Virginia on purpose to make you understand what this means. Someone called me, Kalu, don't you guys have an army in Nigeria? How can a train from Abuja, the federal capital, to Kaduna, the most militarized city in Nigeria, be stopped, people kidnapped until today? Have you heard anybody talk about it? No. Fundamentals don't look good. But when fundamentals don't look good, whoever invests stands a chance to make a lot of money. which means if you invest today, you stand a chance to reap much, much more than the guys are going to wait till June 2023 to invest. Whoever goes right now and buys all those farms people are not buying in the Boko Haram areas that nobody's buying. If whoever buys it now and has a CFO for 10,000 hectares, in 10 years will be a billionaire. It's true. But they will say, why did I think of it? Yeah, because of the fundamentals are not good. So it's really taking the risk. Whatever you buy now, if you have a farm, if you have a farm, I mean, those things were sold wrongly. They're supposed to be equity plays, not fixed income plays. That's why they go into trouble. The farm business is big business anywhere in the world. I mean, we can't even supply cassava to China for ethanol because we don't make enough. So imagine if your club went and bought a farm, then got your club members in China or Germany to send you the real machines to make ethanol for cassava, and you just exported those things. I know a guy I can bring to your club that will teach you guys export step by step. He's doing so, he comes to my place. He's a Nigerian in Ghana, exporting, making millions. Teach you guys step by step, right? You guys can make a lot of money just from exporting yam. He does pineapple yam. He tells me what I'm like, Jesus, charcoal. So whoever invests today, he's telling me he goes to Enugu to buy cashew nuts from a lady. All she does all through the year is accumulate cashew. So she just waits the whole year and buys cashew, keeps in her farm. He comes once a year. He writes a check of 35 million to her. How much is buying the cashew? So there are many opportunities still in Nigeria because wherever there's bad news, there's opportunity. But the fundamentals don't look good. So it's left for you, the investor, to say, yes, I'm going to invest and buy at this bad news. When the good news comes, I'm already in, or I'll just play it safe, hold my dollars. It's your call. If you want to do it, I can advise you how to, but I won't tell you what to do.
Thank you. Thank you. Quite instructive. Somebody says, does that implies that Nigerian bonds are losing money now? I'm reading through the questions. Now, when you were explaining about bonds, are Nigerian bonds losing money?
Yeah, I think I shared, if you go to my Twitter feed today, I shared the FMDQ. I actually put the FMDQ there. If you go to my feed is there, where you see the coupon of the bond. The coupon is what's always on the bond. That won't change. It's always there. You see Euro bonds will pay 8.75. Then you see that's what's on the coupon. The yield to maturity is the real yield you're getting. That's the real yield you're getting. So once interest rates go up, your yield is going to go down. Because what it means that anyone buying that bond today is going to get 8.75. But remember, when that bond was issued, US bonds were 0%. Now, US bonds are 5%, 4%, which means a US guy will be like, Nigeria 8, US 5. I can ignore 3% and be safe. That's how they're going to think. Why should they go to Nigeria and buy 8% when they can buy US for 5% and sleep? Nigeria bonds, you'll be like, okay, they pay this month, you'll be happy. Next month, then he's thinking, look at what's happening to Russia. That's the point. So those bonds that Nigeria issued have got to reduce in price to attract a buyer. Remember what I said, if interest rates go up and you have already bought a bond, the price goes down. But if you are buying new, you are making a profit because you are buying the new bond at the higher offered coupon. The coupon is higher. So every bond in the US right now is going to be issued with a higher coupon. That's why the short-term bonds are doing better than the long-term bond because nobody's buying long-term bonds anymore. Why lock your money for 30 years when the next bonds are going to come out are going to be higher? So nobody's buying long-term bonds. So for long-term bonds to sell, they have to reduce their price. That's why the price is going lower. So not any bond, not just a bond, any fixed income product. When interest rates go high, the price has got to fall to keep it profitable. Like, why would you buy a bond at 8.5 when the new one is going to be at 10? Why would you buy it? That's the whole, it's very simple to understand that, yeah.
Thank you. Somebody says, is piggy vest safe? Like keeping 3 million to
It's what?
Is piggyvest safe? That was a direct, just like a direct
I don't know. I
message.
mean, you have to give me what they offered you. But piggyvest is, I mean, they invest through a SEC licensed party. So they're just an app, but I know they invest through a SEC advised party. The question is Naira safe? Because piggyvest invests in Naira. So it's not this piggyvest is safe. Is Naira safe? If Naira is not safe, okay, you want to do a diversification. Like I said, Naira is no longer a store of value for now. It's just a means of exchange. So any funds you're not keeping, you're not going to spend in the next 3 to 6 months. Why is it in Naira? I mean, even if you take dollar and put it in your pocket, I don't have that slide to show you here, Shala. I'm going to send it to you, promise. If just holding dollar in your pocket is making more money than stocks, Bitcoin, every other asset, just holding paper dollar, which is crazy. Think about it, it's just paper. But everything else is falling so much. They're just holding that paper in your hand is worth something. For Nigeria, once you hold Naira in Nigeria, you have immediately lost 15% or now 16% once you hold Naira. If you hold dollar, you immediately lost 8%. But we know dollar is artificial. We know it's supply chain. We know it's all this nonsense they printed for COVID. So they will get out of it maybe in 2 or 3 years. Can anyone here stake on his life that Nigeria? Nobody can. Like I said, 2023 is going to be the inflection point in Nigeria. Either we become Afghanistan or we become maybe Georgia. It's going to happen. So if we have a good election, everything goes out well, boom, the economy will just blow up. People will just come back, money will flow in, the dollar will crash, exports will boom. It's going to happen. No, and I'm not trying to be political, but we've really gone through 8 years of Jesus. So whoever wins is better. It's like you don't have AC, then you have a broken fan. If broken fan just blowing you that hot air, it's better than not even having anything. That's the problem. So that hot air alone, at least you take off your shirt. And there's no other way of looking at it. If I talk more about the economy, most of you just pass out. So
thank you. Somebody says bring him to SIC. This is SIC now. We have just opened up the conversation.
I'm Shola's sister and brother, if you guys don't know. So
yes, now that is my brother. This is SIC already. All right. Somebody says, what's the name of your book? I'm reading through the questions, so please bear with me. I'll get to all of them.
I got you. Let's talk about your money. That's the time. Let's talk about your money. It's on Amazon. It's on Roving Heights in Nigeria. It's on Kindle as well. Let's talk about your money. 259 pages, about 28 chapters, very simple language. Get it and keep it.
How can we get it in Nigeria? I know it's on Amazon overseas.
Shola, for your folks, I'll give you guys direct sales. I'll give you guys a 10% discount. So anyone in your club wants to buy, just tell me you need this quantity, I'll send it to you. So that way I can do a direct sales to you. But if you're not sure, you can buy it through Roving Heights or through Amazon. But anyway, if you say you want 50 copies, we'll do a direct sale delivery to you guys, 10% discount across the board for you guys. Thank you.
AMA, please take notes so that we can share like in Google Forms. So
I am taking notes, ma'am.
Good teammate, my sister. I haven't seen you in like 2 years. So good to see you on this call. I've been reading. Like some people are literally, they have deserted me in a time like this, but we are coming out stronger. Right? So guys, are we interested in the exporting stuff that I mentioned? I am in.
Oh, very interested.
Yes, so we will be in touch with you so we can talk about it. Right.
So
thank you.
I like this question. Does Ghana bond with this narrative look good? He's talking about the coupon is 7.7. The yield, great example. So you can see the Ghanaian coupon is 7.7, but the yield is 12.07. So if you look at the price, they have to sell that price at below 100 to make that coupon rise to 12.07, because inflation in Ghana is crazy high. So because the inflation in Ghana is crazy high, these bonds don't have any value at 7.85. So what they've done is, if you want to buy that bond, the bank will sell it to you at a lower price. Because the price is lower, it jacks up the yield to 12.07. So the coupon is on the face is 7.78, but the yield is 12. So the question for you is this: what's the inflation rate in Ghana compared to this yield of 12.07? If it doesn't work for you, take your debt studies, buy a dollar, and buy a bond in the US. End of story.
Thank you. Somebody says that, can you touch on Treasury bills real quickly, like 1 minute?
Treasury bills, bonds are all borrowings. The government takes your cash and gives you an IOU. If it's 91 days, it's a treasury bill. If it's more than 1 year, it's a bond. That's essentially it. So you get a coupon on the face. That which means every year they pay you that coupon twice a year. So if it's 5%, they pay you 2.5 every year. It's for income. You don't buy a bond to quote unquote make money. You buy a bond to protect the portfolio or to earn income, or you're retiring and then you want to buy it. The way people make money buying bonds is very complicated. Essentially, they are tracking interest rates. If I know interest rates are going to go up, let me make the easy one. If I know interest rates are going to go down, which means if I have a bond, I will make money. What will I do? I'll go and borrow 10 billion naira and buy bonds. So that when interest rates go down, I already have bonds, so I make money, my yield goes up. That's what they are doing. Yeah, very easy. But for you, it's just you are buying those bonds for income. So when you're aggressive, bonds are like your insurance. If you are retiring, bonds are your income. Yeah.
Thank you. All right. So we have a rain check on the export, whatever, connect. Yeah. And then 10% on the books. I will follow up with you by the side. A few people have asked if they can have the slides. Please, if yes, please send the exact slides that we can share with people. If yes, right. Yes, the book title of the book is Let's Talk About Your Money. Somebody says, how can we buy VTI and VXUS? You define peace. It's on Bamboo, it's on Passfolio, it's on Trove. Yeah. Yeah. All of those,
all those apps have it.
All of those apps, right?
And you can buy them. So that's a good way to invest. You can buy in Naira. It's $20, man. It's expense rate is very, very low. Why I like ETFs, the expense is low. If you buy a mutual fund, you are paying the company because it's a company's product, right? ETFs are like a stock. So V just means Vanguard. There's nothing. V is Vanguard. Vanguard is very, very big, so they keep their rates very, very tiny. So just Google VTI. You see all the expense ratio, whatever, it's all in there. Then you can just buy if you want to. And there's QQQ, there's iShares, there's many ETFs. I like Vanguard because they are very, very cheap. It's the same thing you are buying now. So why are you paying more for the same stock? Yeah. Mm-hmm.
Thank you. Somebody says, what app can we use in the UK? Any idea? Yeah. I know there's Trading 212. Yeah. I don't know if they're still easily, for those in the UK, I think.
Good question. And I have to say, if you're in the UK, don't use American apps to trade. Very, very important. So I don't know UK. I don't live in the UK. So I don't know, they feel like Shola has mentioned, but don't go across board. Don't use American apps and buy US stocks. Why? American apps are set up for American taxes. UK has different tax law. In America, they don't tax certain securities. The way they tax them are different. So for instance, if you go to a UK site and you type VTI, you won't see it. I think they have a different name for it in the UK. So you might see VT, whatever. That's how they take that VTI, then they sort of make it adaptable. So don't go across. If you're buying US, do just US stuff. If you're buying UK, try and get a UK app.
Thank you. My friend says, my friend is in the UK. She says she uses Vanguard, and they won't even allow you to trade on US stock.
Correct.
Okay, yeah. but would these ETFs be available on that on Vanguard?
Yes, you have to ask. They won't be called VTI. They have a different name because it's a US. It's the same composition, but in the UK they will be packaged different because of the tax laws there. So just say I want to buy something like VTI. They will give you that version. Yeah.
All right. Thank you. Thank you so much, guys. It's 10 o'clock. We can't be here all night. This has been a fantastic time. I bet, I mean, it's been like investing 101. I have taken notes. I believe you have taken notes. Yes, we will make the recording available. It's free. Right now, it is streaming on Facebook, but I guess we will put it on YouTube as well, and not just within our investment club dashboard. Any final words, Kalu?
Keep it simple. Keep it simple. Don't do this complicated. I want to buy with margin. I want to sell option. I want to do all this. No, keep it simple. What is your objective? what you want to achieve in 10 years. Once you know that answer, what is your risk profile? Can you absorb 100% loss if in 2 or 3 years you make your 100% back? If that's the answer, then go buy that investment class that matches your objective and risk profile. Ignore what the other person is doing because it has a different risk profile from you. Keep it simple, invest according to your objectives, and have a long-term of their mindset in mind. That's all you want to do. Yeah.
Thank you. Kalu, somebody says, can you adopt me?
Yeah, sure.
Kalu, please adopt all of us, Jare. Right? Thank you so much, guys. It's been an amazing time. For those who are guests and friends, this has been powered by the Smart Investment Club. I just dropped a link. You can read more about what we do. I would love to have you around. Let's share financial literacy tips together. Right now, we are not actively investing, but I mean, this is us. We're doing financial literacy. The community is going strong.
You want to invest in Sola? You want to invest in the market goes up?
No, what I mean is collectively right now. Yes, especially in Nigeria, in the Nigerian market. You know, so this is what we do. We advise people on things they can do individually, and then at a collective level, we're just, you know, waiting to see things that we can do collectively.
What's you have to actually go to your house and look around your house and say what's selling, empty, and you use your phone. Palm oil, we don't have enough supply. There's Okumo, there's Okumo Palm, there's Presco, you know, food, who's making food, all these Bua people, cement. So just keep, when you know that long list, so you want to buy those good companies at a great price. What's a great price? We'll look at the price to earnings ratio. You know, see they have good market share. If the price to earnings, or you can do the PEG, the price to earnings growth ratio. But the one I personally like in Nigeria is look at their dividend yield. People can manipulate accounts, they can manipulate sales, they can manipulate everything. You can't manipulate cash. And cash is, if you say you earn cash, I don't care. Are you paying me that cash as a dividend? Yes. So I look at the dividend yield and I compare it to the return of Nigerian inflation or Nigerian bonds. Look at a bank like Zenith Bank. The price is not bad. High dividend yield. So you buy that stock, you're just getting dividends, you know. MTN, I mean, Jesus, we bought stocks in December, they paid dividends in January. That's crazy, you know. So you want to target those high dividend stocks in Nigeria. If they pay you dividends, you can say, okay, I'm going to change to dollars, or you just buy more. If you are 18 years to 40 years old, you are what they call the accumulation stage. Your objective right now is to accumulate assets. If you're going to borrow to accumulate assets, do it. Let me clarify. You are borrowing to buy income generating assets. If you are building a house in your village and that house will not generate income, don't borrow. If you are building a house in Lagos and it's going to generate income, borrow. In a high inflation environment, you cannot save to invest. Fela sang that song. My friend won't come buy fan. If they sweat, make it a steep for room. The guy was saving money in his whole house. The day he got the money to buy the fan, government announced second tier. You know, Fela is the greatest economist in the history of Nigeria. That song, sang it when? Play it back today and listen to it word to word. It's happening right now. In a high inflation environment, you don't save to accumulate income generating assets. You borrow, so you put your income aside, you get the asset, you use the asset, then you use your income to pay back the loan because you have locked in the interest. So the interest rate might not go up as fast as inflation. So use your salary and pay back the loan. If you try to save that salary, it won't happen. That's by passing.
Wow, Kalu, that was another masterclass.
I know, right? I don't want to start. It's 10 o'clock. Let's definitely go.
This one that you just said now is another masterclass. Don't worry, we'll bring you back again.
Yeah, we'll
guys, thank you so much. I love and appreciate all of you. Thank you for showing up. I'm glad that I didn't do this alone with Kalu all by myself. All right, we will make the video, the replay available Yes, export. I've been getting messages. Export. We will do it.
I'll talk to you.
And, right, we'll talk.
Sure,
Thank you so much. I really
you guys have a
appreciate
good one. Enjoy.
All right, God bless you.
Bye, everybody.
Okay.
Bye.
Thank you, everyone. See you some other time soon. God bless you. Have a great night rest. Bye from here.
Bye, people. People should turn on their cameras. Let's see.
Okay, turn on your cameras. Let me even
Please turn on your
allow yourselves.
I
Thank
think
you, Kalu. Thank you, Coach.
Yeah.
I
Mute
have
yourself.
48 people.
Thank you. So good to see all of you. Oh my God, I miss you guys.
Hi. Thank you, Kalu.
Let me see the names. Oh, Faye, I miss you.
Thank you, Kalu, for your
Okay, a lot of
presentation.
Bye.
Thank you. Thank you.
All right, people.
Everybody's been a while. You
Thank
Tipe, where have
you.
you been? I haven't seen you in like 2 or 3 years. We should talk. All right, guys. See you soon.
Good night, everybody. Thank you for
God bless. Tim Tucker Johnson has my boy. Please pass my love to him. Pumi Komolafe, Chioma, baby, everybody. Love you and see you soon. God bless.
Same here, Coach. Sweet dreams. Thank you.
Bye.
Bye. Show you've been on every call. Oh, Shaman. I want to say me.
That's how we roll.
Yes, sir. Correct, girl.